what's the old saying, right? Death smiles at us all, and all we can do is smile back.
There's uncertainty about the world, and one of those uncertainties is how long you're going to live, and how do you protect against that? You know, there were 57 countries in the world that had inflation rates last year over 10%.
Wow.
If you live in Argentina or Turkey or Nigeria, you don't own life insurance because you are going to live longer than the Argentinian peso.
Chris, I'm just reminded of kind of the perverse incentive that the state gets paid every time someone dies. Like, that's crazy.
We have already sold a policy that will outlive everyone in the company.
Bitcoin denominated life insurance versus just holding Bitcoin. Like, what's the advantage to be had there?
This idea of a global decentralized store of value outside the control of any government, any state, is world-changing for people who live in countries who've just had completely mismanaged and unstable monetary systems.
Have you ever wanted to start a business in the Bitcoin space? If so, then the Wolf Startup Accelerator could be for you. Wolf is the first startup accelerator dedicated exclusively to businesses developing in the Bitcoin Lightning Network. 4 times each year, Wolf brings teams from around the world to New York City to work with like-minded entrepreneurs, pushing the boundaries of what's possible with Bitcoin and Lightning. The program is designed to help early-stage companies achieve product-market fit, develop their brand, secure early-stage funding, and grow businesses that fuel the global adoption of Bitcoin. Go to wolfnyc.com to learn more or apply today. Again, that's Wolf, WOLF, NYC.com. Life insurance.
Life insurance.
Not a popular topic. I think what a lot of people...
In certain quarters, it's popular, but...
For most people, I think they don't want to talk about it because that involves you contemplating your own death, demise, and what will happen to all your stuff after the fact.
Correct.
So not a fun topic or conversation.
Every conversation I have with people, I guess they are contemplating their own demise.
Yes. But again, maybe not necessary, but obviously a useful conversation, especially if you love your loved ones, right?
Yes.
It's helpful for them to have some assurances, some security beyond your death, because, you know, what's the old saying, right? Death smiles at us all, and all we can do is smile back.
Yeah.
So what...
But actually, can I just say, when you start
please.
there, what's interesting about that is maybe the core idea of life insurance or all insurance is that bad things happen and you don't know when.
Mm-hmm.
Right? So we're all going to die. And we don't know if we're going to get hit by a bus tomorrow or, you know, more hopefully we'll live to 100.
Mm-hmm.
So for any individual person, you not only do you not want to think about it, but you obviously just don't know.
Yeah.
But when you start to think about more people, like you have 100 people, you have 1,000 people, you have 10,000 people, then you start to have these like statistical regularities of how many of those people are going to die. So the idea of life insurance is originally this risk sharing idea, right? So some poor bastard's going to be the first one to die. We don't know who it's going to be. Like let's 1,000 of us put $1 in a pot, and then you know, the first 10 people to die get $100. So it is a like pretty fundamental idea in the sense that there's this uncertainty around death, and how do we protect ourselves from that uncertainty?
Right. And this is where the moneyness of life insurance comes into play, because that's what money is, right? It's an instrument of economic optionality. So it can be used to acquire the widest set of things in the marketplace so that no matter what happens to you, you have the most options at your disposal to deal with uncertainty, right? No matter which way reality shifts. Obviously, there's a money component to life insurance, but
when you put it that way, one of the uncertainties you have is this probability of dying. I mean, there's a certainty you'll die, but a probability that you'll die soon.
Right.
But that probability is small. So one of the things you can use your optionality for, I guess, is to buy protection against that risk.
You're hedging a tail risk.
Yeah, what you're hedging is just mortality.
Yeah.
What in insurance we call mortality risk, right?
Yeah.
So, and actually, it's important though that the reverse is true too, which is also a money thing. Is the idea of an annuity, which is you like you give someone $100, and they're going to pay you $1 for every month you're going to be alive forever. Well, on a statistical basis, is on a population, right? You have people are going to die. People are going to die in some probability distribution. You know that. But as an individual, it's possible you'll live longer than you're supposed to. So these are like flip sides of the same coin. Like life insurance is about like how are my loved ones, how's my family protected if I die before I'm supposed to? It's mortality risk. And then there's the reverse of that, or the inverse of that, which is what happens to my family if I live longer than I'm supposed to. Now, obviously, if you have enough money, enough optionality, then you don't really need to buy an annuity because that's going to be fine. But for obviously, there's a lot of people who you may have like saved an appropriate amount for your retirement, assuming you live as long as you're supposed to. So maybe you want to buy from a counterparty protection, like income protection for what's going to happen if you live longer than you're supposed to. And you imagine that there's enough people who have that problem, they all get together. And that's why a lot of original insurance companies are mutuals, in the sense that they're owned by their members, is exactly because there is something like fundamental about that idea that like we're a group of people who have this uncertainty, we get together and we like solve that ourselves.
Yeah.
Anyway, that was
no. It's interesting. It's a very obvious thing in a way, as you described, with the 1,000 people throwing $1 in a jar, and the first 10 to go. They sort of end up realizing that lower probability outcome first, get a benefit. Correct. So when the uncertainty strikes, you're offsetting it with some degree of optionality to the
literally called in insurance the death benefit.
The death benefit to the heirs,
to
right?
the beneficiary. Yeah,
yes,
the heirs,
beneficiaries. So something that's, maybe not as old as money, but close, right?
It's hundreds and hundreds of years old. I mean, money's thousands of years old.
Yeah.
There's a lot of theory. I think often the first life insurance is thought to be something in like the Mediterranean, like city states, so there's a lot of sailing, right? And you're a Venetian sailor, and you're going to go out on the boat, and you don't know, like some number of those boats just sinks to the sea.
Yeah.
I don't know what that number is. It's a third. Yeah. So if everyone who is going to go out buys protection, burial insurance, or some sort of life insurance for their family, like it sort of makes sense, right? And it actually fits into this grander story of like the emergence of capitalism and like the idea of risk. And we usually think about risk in that sense in a like business risks or ventures. But it's very similar as like a human being. You're taking risks every day. Again, you can get hit by a bus, or you can get cancer, or whatever. So I think that there is this parallel emergence of risk taking and money in that sense, like money extending into funding ventures that also then sees the emergence of forms of life insurance.
It sounds like very intrinsic to capitalism itself, right? That the idea of, or even the joint stock company, right? That
correct.
A wide set of people could have equity in a business so they could share the risk and the reward.
Correct.
That would be unduly burdensome on fewer people, right?
Correct.
Which allowed us to engage in larger projects. Life insurance is really just
very, very similar. It's just the risk we're protecting against is our own mortality.
Right, which is especially, we still have this in a lot of large organizations where they have key man policies, right? So
correct.
the mortality is not
Something I
all
hope to eventually
mortalities
do.
are
Yeah.
created equal, I guess, right? If the CEO dies, that tends to be a little more impactful than the staff accountant dying.
Yeah. Although obviously the interesting thing is that it may be much more, to the optionality of money, much more impactful to the staff accountant's family,
Right.
in their ability
Exactly.
to, have food
Right.
and housing. So there is this interest, but for the corporation, right, buying Keyman, you buy a bunch of Keyman insurance because if your CEO dies, you expect like there to be this value. And then actually, though, like we've sort of gotten to the nub of like why this exists. And what happens is that societies, as articulated through governments, I guess we could like have a conversation about that, but have decided that like actually people buying life insurance and annuities are good because orphans and widows starving is bad.
Right.
So there ends up being tax benefits and tax privileges as tax regimes emerge for life insurance and annuities because there's a collective action problem, right? Like, why should you buy life insurance? I mean, there is a real reason, but like people sort of opt to buy less than they should. They're underinsured. So there emerges in tax regimes, tax benefits, and then you end up with bigger, larger, more complicated policies. And then suddenly the CEO has a bunch of life insurance, but it's not because his kids are going to starve. It's because there are tax benefits for and tax privileges for life insurance, and it's a way to do intergenerational tax and estate planning. So it ends up being a tool in this toolkit that can get very, just gets complicated. But at its heart is back all the way back to this idea that there's uncertainty about the world, and one of those uncertainties is how long you're going to live, and how do you protect against that?
Yeah, so starts out as a pretty obvious need or want, right? People want to insure against the uncertainty of early demise, which inevitably strikes different people different times, unpredictably. But then there are tax benefits associated with that because, well, why would you? Actually, maybe you could say a little bit more about that because does that mean estate tax doesn't apply to some of these benefits? Like the widows and orphans just get the money tax free?
Yeah, I guess estate tax is complicated. So let me just start with the simple case of the staff accountant. So the staff accountant dies. He has bought. He has $1 million house. He buys $2 million worth of coverage, so that his wife and kids can pay off the mortgage and have $1 million to live and eat. That the beneficiaries of that policy. I'm just going to, for our purposes, I'll talk about the U.S. Like every country is a little different, obviously. In the U.S., the key thing that happens there is that the $2 million to mom and kids is income tax free. And that matters to them because it does, in some theory, it's like income to the beneficiaries, but it's completely income tax free. In that particular scenario, there is no estate tax, right? Because they're below the $10 million or probably $20 million or $10 million in this case, or whatever the exemption cap is. It probably won't be that low, right? So for them, it is truly tax free. When you get up to the estate tax, people just do different things depending on their scenario. So it's not inherently outside the estate. But there's this notion in insurance about there's the life that's being insured, and there's who owns the policy. So what people do. I'll give two different scenarios. One scenario is you want the life insurance policy to be outside your taxable estate. So then you probably, if you're worried about estate tax, already have a trust of some kind that's outside your taxable estate. So then what you do is you have that trust buy life insurance from on the life of the staff accountant, or the CEO, rather, I guess would be a better example. So then the CEO dies, you get this multiple from this protection that goes into, the CEO dynastic trust. That's one option. And that's sort of more like clearly about estate planning. Another option that people use a lot of life insurance for is you have an asset inside your estate that's very valuable, but you really don't want to sell it. The classic example would be like you have a family business. Mm-hmm. So I have a family business, I have a small factory, it's worth $100 million. I die, then my beneficiaries get my $100 million factory, but they're going to owe 40% estate tax. So what do? You have to sell the factory, which then destroys this huge amount of economic value for the family. So what you might do, and what people do, is they buy a life insurance policy for $40 million. Mm-hmm. That's the death benefit, is $40 million. So then whenever you die, and the estate gets the $40 million to pay the estate tax, and then you get to keep the factory. So that's like another example of how people sort of use life insurance as a planning tool. They're around estate tax. I guess I was about to launch into some other tax stuff, but it doesn't matter.
So this domain of like death and money, insurance, it sounds like it's ripe for some misaligned incentives. Let's say, like, even as you're describing estate tax there, I'm just reminded of kind of the perverse incentive that the state gets paid every time someone dies. Like, that's crazy, right? It's crazy that father can't pass business to son without paying the state. Like, what did the state do to facilitate that exchange? I don't exactly understand that. What considerations, I guess, do you need to take into account as you're thinking about planning for your own demise, the economic livelihood of your loved ones, and then if you have a business, which you probably do in these circumstances, the succession planning for that business as well? What are the things that you have to think about?
I mean, it's a huge, big question. And to be honest, I think if you're in that scenario, there's a huge number of considerations that go like way beyond life insurance. And you're starting with like legal and accounting considerations of like, what do you want your tax, like trusts and estates, trusts, like onshore, offshore. There's often, I think this is implicit in your question too, is there's often a lot of complexity around how you're going to feel about it, how you feel about your children, what protections you want to put on your estate, for when they can access it or not access it. How do you set things up so that if your son gets divorced, the family business is protected? Like, there are things you can do now to do that. And to be honest, I'm not an expert on all those. You've probably had in the show people who do like estate planning.
No, we actually haven't.
Oh,
so,
it's interesting. Well, it's another one of those topics that is really important and can be really boring, partially because it is itself dry. And then I'll say this for life insurance too, that the people who, become estate planners aren't necessarily the most lively bunch of people. So insofar as it has to do with life insurers, I do think that the incentives that have sort of gripped the system are that life insurance is very much like sold. It's not bought. This is the old line. So you end up like having a life insurance agent, and the life insurance agent or someone else is incentivized to sell you products that have the biggest commissions. And that's natural. I mean, so then what happens is they sell you the product that has the biggest commission. The products that have the biggest commissions tend to be the most complicated products. And that complication comes through, like options inside the policy or, spreads on products or whatever, which naturally I think come at the expense of the user, right? So, if your bank comes to you to pitch you like an options derivative strategy, like that's not good. Like they're making money somehow.
Sure.
So no matter what they say, where it's like, okay, there's principal protection, you're getting like, 70% of the upside on the S&P 500. Like you add all those things up, though, like somewhere they're making a lot of money.
So the fancier it gets, the more skeptical you should be.
That's my take.
Yeah.
Insofar as it has to do with the product, the benefits, the guarantees, things like that. There are people who are going to disagree with me on that. There are fancy structures in insurance that can be really beneficial. So often when people hear about our product and they are wealthier, someone has pitched them on what's sometimes called private placement life insurance. So private placement life insurance, what is private placement? Private placement is like when you invest in private equity fund or a hedge fund or a venture fund. Those are done as a private placement, right? It's not a public placement on the stock market, it's a private placement. So private placement life insurance is the idea of you have a life insurance policy, and it's sort of like an investment account, and you put private place securities inside that policy, and then there tends to be tax benefits around that. And one of the tax benefits is you don't pay intermediate income tax or interest income taxation on like the contents of the policy. So it can serve much like a 401k or an IRA can, in that it can compound inside the policy tax-free of really any size. So what people will do, right, is imagine that you have an investment in a DeFi fund, and it's doing a lot of trading, right? Like every day, it's a high frequency trading. Like every day, it's you might lose 50% of those gains over a year to taxes because it's all short term capital gains. So there are types of insurance policies that are designed to allow you to invest inside that sort of thing, and then it's like compounding tax free. Again, I'm not a specialist in that, so maybe life insurance is like a lot of things in financial service where like I think the simple products are really beneficial, and our product is dead simple, and it's just in Bitcoin, but it is like from the 1830s. It's so simple, and then there's like this messy middle where I actually think this is like one of the biggest problems in like money in some ways is if you have like $100,000, actually financial advice is very straightforward. Like pay off your credit card debt, max out your 401k, buy some Bitcoin, I guess, right? And then if you have $50 million or $100 million, you're in this whole other world that frankly, like I don't quite understand myself, obviously. But then you have like a Big Four accounting firm, and you have a wealth manager, and you're in some multifamily office, and then like you're getting these really complicated structures, but they get explained to you, and they're expensive, but like you get the tax gains. And then there's like this huge messy middle of Americans, right? Your net worth's like $1 million to $25 million. You own a small business, and a lot of those are like, I own 10 McDonald's franchises. I own a few apartment buildings, and that's a lot of the wealth in America. But then those people tend to get sold bad products because they're not rich enough to get the most sophisticated good stuff, and they're not poor enough that things are simple. So you end up, with some investment advisor who's like your uncle's golf buddy, and then you're getting like stock picks, and then so there's this old joke about like you see a Ponzi scheme enforcement action from the SEC, and it's like a bunch of dentists in Florida, and that's just sort of it's like representative. There's like a type of person who I think is just underserved by our system. So anyway, like complexity into itself isn't bad. But if you're not the type of person who clearly is supposed to be getting complexity, then I'm skeptical of all financial complexity.
Right. Yeah, so I mean, the more money, more problems, right? When you're above a certain threshold, you're going to have more tax implications. So therefore you maybe need to get a little bit more exotic with the way you are orienting yourself in the tax code, something like that. This September 5th through 9th, 2024, join me on the Pacific coast of Mexico for our first ever men's retreat, which we are calling The Art of Alpha. In a cooperative training environment at a world-class retreat center, we will be having daily meditations, movement practices, yoga, cold plunging, infrared sauna, lymphatic drainage, massage, heart rate variability training, gut health lectures, all while enjoying an anti-inflammatory diet, free of allergens and designed for optimal full body health. The retreat center is a gorgeous biohacker's paradise located right on the ocean. You can think of this place as a nervous system reset facility. At the Art of Alpha, we are seeking men who wish to cultivate freedom, wisdom, sovereignty, physical fitness, truth, and love in themselves and in those who look up to them. If you've always felt motivated to push yourself to new limits, to discover the best version of yourself, but you've struggled to find the right community to immerse yourself in, then the Art of Alpha is for you. You will be training alongside a group of men who have been individually selected for their outstanding self-discipline, virtue, and work ethic. To apply to join the first ever Art of Alpha event, go to breedloveevents.com. And yes, I did say you will have to apply as we're striving to gather a select group of men for this experience. Again, that's breedloveevents.com to apply to join us for the Art of Alpha on the Pacific coast of Mexico, September 5th through 9th, 2024. Have you ever wanted to live in an off-grid community with complete food, energy, and water independence? If so, then you need to check out the farm at Okefenokee. The farm is a pioneering community designed to foster longevity and well-being, eliminating elements that detract from these goals. At the farm, the convergence of nature, nutritious food, a supportive community, and the ethos of slowing down is unparalleled. Positioned at the gateway to the UNESCO World Heritage nominated Okefenokee National Wildlife Refuge, the farm at Okefenokee stands as a testament to a lifestyle that truly nurtures health and happiness. Unlike conventional housing developments where a token communal garden may suffice, the farm itself is the community. Small, intimate microvillages seamlessly integrate into the fabric of a sprawling agricultural community. So if you're interested in joining this off-grid community, then go to okefarm.com today to learn more about becoming a member. Make sure to tell them that I sent you for a $21,000 discount on their custom cabin pricing. Again, go to okefarm.com to learn more about joining this revolutionary regenerative agriculture community. You mentioned Bitcoin, and you said something about like a product from the 1830s.
Yeah.
So how does Bitcoin play into this life insurance game? And then what did you mean by that specifically? Was it?
Oh, that's about, well, why don't I just for a moment explain at the lowest level what I do, and then if you, as you want to know more, you can ask more questions. So we run a life insurance company. It is a fully fledged regulated life insurance company. That company is domiciled in Bermuda. We can talk about Bermuda, but Bermuda is like a legit place to have a life insurance company. It's where many insurance companies all over the world are based in Bermuda. And what we liked about Bermuda is it's a tough regulator. It took us 2 years to go from having the idea to being regulated. You have lots of concerns about our investment policy and our enterprise risk management framework and all of that. But they're tough, but they're willing to be innovative. And the particular innovation that they allowed us to do and that our company has invented is the company is entirely in Bitcoin. So we like state our financial statements that get audited.
Oh, wow.
In Bitcoin.
Your unit of account too.
Our unit of account is Bitcoin.
Wow, cool.
We do not have a dollar bank account for that entity. It truly operates in the Bitcoin standard. So we do our regulatory filings in Bitcoin, as I said, our financial statements, our capital and solvency stuff, which I would love to talk about. And then users pay their premiums in Bitcoin, and then we pay out all claims in Bitcoin. So For us, truly one Bitcoin is one Bitcoin. So what's nice about that is just like if I was running a insurance company in Swiss francs, I wouldn't ask myself every day, what's the exchange rate between the Swiss franc and the dollar? Similarly, like we don't have to concern ourselves day to day. I mean, our policyholders and the people who are thinking about buying policies often care a lot about what the price, the like exchange rate of Bitcoin is. But fundamentally, it doesn't matter to the company, right? Like our financial statement is just sort of like growing over time as we sell policies. So one of the nice things, the 1830s comment is one of the nice things about going to Bitcoin land is everything's new. We're the only ones. There's no other life insurance company. So I think we are able to look at the whole scope of potential products and all the things that exist in the world, and in some ways go back to our conversation and say like, well, what is life insurance really about? Like, what is it really for? Not what has it become and how has it been made really complicated, but like, what is it at like its core? And then create a relatively simple product to describe. Now, the benefits of that product might be complicated because like the tax code's complicated. And it interacts with all the things like trust and estates and like planning for it becomes complicated in its implication, but that the product itself can be really simple. And that's sort of what I meant. Like we're running a life insurance company from the 1830s in our product design. And that's, I think, hopefully easier for users to understand. But also, like inside the company, I talk a lot about like we're legitimately trying to build for the long term. Like we have already, this is like just a crazy thought. We have already sold a policy that will outlive everyone in the company, right? Because when you have even a few dozen policies and we're 10 employees, just like on the probabilities of like, will someone in that group of dozens live longer than the 10 of us? The answer is probably yes, right? And that, I think, puts you in a different perspective that we want to be careful, we want to be prudent, and I want to be able to say that to myself that every product we design and we sell, like I understand the benefit, like I would buy it. And in fact, I have bought the product we have. Yeah.
Well, so
there was a lot there. Sorry.
Were the 1830s policy were there policies like this being written in the 1800s with just gold? Like people just.
Yeah, it's interesting. I don't think so. So let me describe the product for a second. So our product is called Whole Life. So it lasts your whole life. And because you are eventually going to die, there will eventually be a payout. So there are other types of products I think people intuitively know about called term life. So term life lasts a certain term. The things are very well named.
That's good.
So for example, I have a term life policy, actually back to the staff accountant, approximately equal to the size of my mortgage. And it is a 30-year policy. So that in that 30 years, if I were to get hit by a bus, my wife and kids would just be able to pay off the house, right? So we have this liability, which is the mortgage. So we bought essentially an asset that we pay for every month or every year. And then there's a matching between this like outstanding liability I have and this asset we have, right?
Got it.
So that's the term.
Yeah.
Whole life is sort of more naturally an intergenerational savings product, right? Because you will eventually die. And actually, the old simple whole life products would be something like you would have to keep paying your whole life to. So you pay like $1 a month till you die, and then you get $1,000 payout. And then the idea, you can like do all the math to like know what that ratio of like $1 a month to 1,000 should be depending on your age and stuff. Our product is what's called a 10 pay, a limited pay. So you might pay 1 Bitcoin a year for 10 years. And then from the moment you pay your first premium, we are guaranteed a fixed payout. So to use my example, you might do 1 Bitcoin a year for 10 years. And then when you die, your beneficiaries would get 15. Okay, let me pause to go back to your question. The reason it's somewhat hard to do that with gold, if not impossible, I'm not sure it's possible, but it's hard, is that there is a saving, like a rate of return element there, right? That we have to churn 10 Bitcoin into 15 Bitcoin. Or, if we had a dollar policy, we have to turn $1 million into $50 million. So I don't actually know enough about like the economic system of the 19th century. Presumably I guess there had to be lending in gold and yield in gold. So then maybe there were policies.
But you were just, I guess, pointing at the simplicity of the policy.
Yeah, yes, the simplicity.
Okay, got it.
Yeah.
So what then would be the difference if someone is just thinking to themselves, okay, Bitcoin makes good life insurance in a way. It's kind of what you're saying here, right? It's a good savings asset within your own life and beyond your own life.
Correct. And in some ways, that's like at the heart of hodling, right? Is this idea that there's like intergenerational wealth creation.
Exactly.
Bitcoin.
Yeah. If you're truly accumulating Bitcoin for the long run, well, the long run extends beyond your life, obviously. And so you would be aiming actually to pass your Bitcoin accumulation onto your children or heirs at some point. What then is the advantage of having would we call this a Bitcoin-backed life insurance policy or Bitcoin-enabled? I'm not sure.
I would just call it like I don't know. It's not backed by Bitcoin. It just is. It is
Bitcoin. Denominated, yeah. Bitcoin-denominated life insurance versus just holding Bitcoin. Like, what's the advantage?
Okay. I thought you were asking a different question. The big advantages come back to like the tax situation. So what I like to say about our product is it has 5 benefits. The first is there is like literal protection in the sense that you could get hit by a bus and then your kids would get 15 instead of 10. And 15 is more than 10, so that's good. More Bitcoin, better. The second is that if you held Bitcoin and you did the yield generation strategies that we do, which actually would be difficult because there are benefits to like scale and counterparty stuff, and we can talk all about the credit side of the business. But even if you could, you would owe interest income every year. So you wouldn't actually get to 15. So we try to, essentially we're trying to get our users 2% returns a year. And if you were getting 2%, you would owe half of that to the government. And then you wouldn't have the compounding up to 15.
Got it. Okay.
The third benefit is that in the tax code, if you follow certain product designs that we have done, you can borrow against the policy tax-free. And in our case, you can borrow Bitcoin out of the policy tax-free. So if you put Bitcoin in the policy, and Bitcoin's purchasing power appreciates to $600,000 or $6 million or $60 million, whatever you think it's going to be, whatever Michael Saylor number you believe, then you could borrow Bitcoin out. It's like new tax basis Bitcoin. You could liquidate it. So I think for there are different personas of buyers, but if you have a lot of Bitcoin, whether it's 50 or 500 or 5, whatever is a lot to you, it can make sense to take a portion of that and have it in this life insurance policy for that borrow benefit.
So that's interesting. I've never heard of a product like that. The life insurance policy is Bitcoin denominated, but you can borrow Bitcoin against it.
You borrow Bitcoin actually like literally out of it. It's called a policy loan. You borrow it out of them.
So it's coming out of the policy. It's not.
There's like there's inside the policy. There's this like accumulating account value. It's called a surrender value because literally, if you surrender the policy, that's what you get back.
Yeah.
And that makes sense, right? Like you sort of invested in the product, and you're in year 15, and you can get something back. That's the surrender value. But you can also take a policy loan against that surrender value. And again, there's a bunch of rules and machinations, and that's why it's a 10 pay and all this stuff. But we have followed all those rules, like have a legal opinion that under the Internal Revenue Code, it follows all these rules, is a life insurance policy, et cetera. Then, yes, you can take a policy loan out of the policy. And from your perspective, that is like a fresh, brand new Bitcoin.
Forget multivitamins and other supplements. Animal organs are the most nutrient-dense foods on the planet. You can get 100 times more nutrients from organs than you can from muscle meats. But the problem with eating organs is that they are difficult to find in stores, they are difficult to prepare, and even when they are prepared well, they often don't taste great. Thankfully, Heart and Soil Supplements has made consuming organ meats so much easier by providing powderized organs in capsule form. Organ meats include everything your body needs to thrive: vitamins, minerals, peptides, proteins, and growth factors. This is why organ meats were the most prized foods for our ancestors. Fortunately for us, Heart and Soil makes these treasured foods easily accessible. So go to heartandsoil.co today and use discount code BREEDLOVE to get started on your journey to optimal health and vitality. Again, that's heartandsoil.co, discount code BREEDLOVE. I'd like to thank my friends at Swan Bitcoin for their long-standing support of the What is Money show. Swan's mission is to help millions of people get into Bitcoin, so they built the best solution to set up recurring Bitcoin buys and automatic withdrawals into cold storage. With the Swan app, it takes just 2 minutes to sign up and start buying Bitcoin. If you're a new customer, you get $10 in free Bitcoin for signing up, and the first $10,000 of Bitcoin you buy incurs 0 fees. If you're an existing Swan customer, then the next $10,000 of Bitcoin you buy now incurs 0 fees. So if you love to recommend Bitcoin to friends and family, then Swan is the best place to start. So go to swanbitcoin.com/breedlove to get started today. Again, that's swanbitcoin.com/breedlove. Most people, when they think of borrowing against their Bitcoin, they know they're taking on liquidation risk, all of these
There's
things.
no liquidation risk.
Okay, so what is, maybe just describe the risk associated with that.
Yeah,
loan.
actually, so in some ways you are short Bitcoin in the sense that you owe us Bitcoin back. You're taking a loan.
Right.
So let's say...
but if you held the Bitcoin, you would be neutral.
Well, actually, I think the best thing to do is you do this because you need some liquidity for some reason. You sell the Bitcoin. So let's say, go back to my example. You put 1 Bitcoin a year for 10 years. It's year 15 of the policy. I don't have the schedule memorized, but you have a surrender value of 12 Bitcoin. You borrow 2 out. So you then owe us Bitcoin, and there's an interest rate on that. So so it's 2, but it's accumulating.
Yeah.
But what happens is you never have to pay the loan back. What you have to do is die, and then the loan is netted against your death benefit.
Gotcha.
So what you really want to do is, I want to buy a house. I borrow the 2 Bitcoin out of the policy. I sell it immediately. I owe no capital gains tax because it's like new Bitcoin to me. So now I have, go back to my Bitcoins at 600,000 example, I now have $1.2 million. I buy a house. I'm chugging along. I die. Instead of a face amount of 15, you net the 2 out. So my kids are only getting 13. Yeah, it's a cool aspect of the policy. There are people who like don't even have kids or wife, and they buy because in that way, no matter your age, if you're planning to hold Bitcoin for a long time, /forever, but you think there might be some possibility that you need liquidity at some point, that would be the best liquidity. Now, some people say like, oh, well, I can just like borrow against my Bitcoin. I can like borrow on Maker against my Bitcoin.
Yeah.
But the distinction there is that you, no matter what in those loans, you're taking currency risk, right?
Sure.
Bitcoin could go down. It could go like it doesn't. It's you might have to have margin call. Like it actually is just like you're making yourself an FX trader. Whereas one of the things that we try to do and try to get our policyholders to like think a little bit more this way is just like, no. What about a Bitcoin economy? Like, what does that really look like? What does it mean to like think in Bitcoin terms, and to think less about dollars? Like, I don't like to say the price of Bitcoin. I think that's wrong. I think of Bitcoin more as a means of exchange and store of value. So I like to say there's an exchange rate to Bitcoin.
Right.
And is it Bitcoin's getting, I mean, the old gold dollar thing, like, is Bitcoin getting more valuable or is the dollar getting less valuable?
Right.
Maybe it's both of those things.
It's a relative thing.
Yeah, it's a relative thing.
It's an exchange ratio. That's interesting. So, I mean, yeah, I could see, again, more exotic maneuvering where you could like borrow Bitcoin out of the policy and then borrow dollars against that Bitcoin and then use the dollars to buy even more Bitcoin. You could get like leveraged exposure.
Yeah, or I had a user say, okay, what I'm going to do is I'm going to borrow Bitcoin out of the policy. Like in 10 years, I'm going to borrow Bitcoin out of the policy and I'm going to play the vol. So the exchange rate with Bitcoin goes down. Then I will pay the loan back and I'll have a capital loss.
Yeah.
And then I'll wait till Bitcoin goes back up and then I'll borrow again. Look, that's not, I mean, I'm sure people will do that.
Sure.
Fundamentally, one of the things that I try to communicate, though, about this policy is, just take myself. I have no idea what the price of Bitcoin is going to do today, tomorrow, this week, this month. I don't know. I don't have an opinion about it. I'm not trading Bitcoin that way. The opinion I have is that Bitcoin will definitively be a more valuable store of value in 10 years, 20 years, 30 years, 40 years. Significantly more valuable. And that's what this life insurance policy, the company I've built for myself, and for every one of our policyholders, like those are the time frames that you should think about, need to think about, and that we are building for. And it's just a slightly different perspective. So it's not to say that I'm 100% we will have policyholders who come up with all sorts of creative things to do with the policy loan, just like you said.
Right.
But what I mostly think people should do is hold this policy for forever. If you need some liquidity, it's the place to take it from.
Right.
If I rewind, I just want to mention like the last things about the policy. One is there is some estate planning aspect. People, you buy it on your life, but you have a trust own it, things like that, so you can get some Bitcoin out of your estate. So that's like a maneuver people do. And then the last thing is, I think there are some real benefits to having a product, a part of your Bitcoin that's sort of like titled and lives outside the United States.
Right.
Partially that's, it's usually not recoverable in bankruptcy. It's usually not recoverable from debt collections. In many states, it's outside divorce. If that's a thing I hope none of our users ever have to worry about. But also, look, I don't put this probability very high, but there's certainly a set of our policyholders who believe that there's a non-zero chance in the next 40 years that Bitcoin could become illegal in the United States, or there could be seizures of Bitcoin, and it's not going to help a lot. I mean, maybe your hardware wallet helps you, but like there are, if the state is going to come after your Bitcoin, that's going to be bad.
Yeah.
So doing some long-term planning to have some of your Bitcoin live offshore, that's nice too.
Yeah.
Anyway, sorry to just jump back into my mini sales pitch, but
no, it's interesting to think about, and I wonder what would be so. People end up using Bitcoin as this long-term savings vehicle. that sort of does the job, right? But there's certain, it seems to me like the main, and correct me if I'm wrong, the main advantage here would be tax and regulatory advantages, basically.
Yeah, I mean, basically, what I say is like, look, in every Bitcoiner's heart, every single user, well, I guess I have like two pretty different sets. I have one set of users who are like hardcore Bitcoiners, and I have another set of users who just like people who are wealthy for other reasons, and then they like are buying 5 Bitcoin, they might as well put it in this tax box.
Yeah.
But anyway, so on the core user of like hardcore Bitcoiner, like look, in every Bitcoiner's heart, I feel like there's this tension between a real desire for self-sovereignty, for self-custody, for, to your point of like, what is money? And that like ownership and that optionality to have value distinct and separate from counterparties. I think that is what makes Bitcoin special, and that is like the option, the reserve, the thing that you always can do that makes Bitcoin distinct, right?
Yeah.
On the other hand, every Bitcoiner I know hates taxes. And there is just some practical tensions between those two things. And should there be tensions between those two things? Probably not, right? Like, I think I've listened to your show a ton. Like, there's a lot of conversation about that. And like, what is the role of the state? And like, what should governments do? And what should they have the rights to do? But like, just in the world we live in now.
It's kind of like, don't hate the player, hate the game.
Yeah, like there's some tension there, right? So what we have a lot of our like, our policyholders do, if you have again, whatever a lot of Bitcoin is to you, you know, maybe you have some of it in a hardware wallet, in a safe deposit box, or buried in your backyard, or wherever. And you have some of it in multi-sig, like whether you prefer Casa or Unchained or Swan or whatever, you have it in a multi-sig. And then in some ways we see what we have as like another box. And yes, that box has some disadvantages in the self-sovereignty spectrum, right? Because to get the benefits, you have to do everything Bitcoiners hate. You have to send us the Bitcoin. People don't like that. We put it, your Bitcoin and everyone else's Bitcoin goes into a pot. It is like literally hypothecated.
Right.
And then in very conservative ways, at a very low rate of return, to comply with the tax rules, there has to be this like 2% promise. So we have to get yield in the Bitcoin.
Yeah.
So yes, those are all uncomfortable things.
Yeah.
But then you get all these benefits. So that's why I think we see people, again, put 5%, 10%, 1%, I don't know what the number is, into the policy. And yeah, and look, partially it's that I spend a lot of time having to think about, talk about, like being an insurance company. Like, we have a chief risk officer, we have an enterprise risk management framework. Like we have a monthly regulatory meeting. Like I have to put up a bunch of first loss capital, which is a ton of Bitcoin. We have to do all these capital calculations. Like we have like 19 corporate policies. We have a credit committee, like all this stuff. And I know this is like, part of the challenge is like all stuff that BlockFi and Genesis said, you know, and clearly lied about. But I think that we actually have done all those things. Every single user, every single policyholder we have, every single potential policyholder we have, like talks to me or someone on the team. There ends up being this element of trust. One of the elements of trust actually is what I just said, which is like, we don't want all your Bitcoin.
Yeah.
We're like an intergenerational wealth transfer, savings, tax vehicle. You know, it's part of your thing. And like, we don't have an opinion about what the rest of it should be. And also we have policy limit sizes. Like, I think we just try to exude that, like, we built this company in some ways for ourselves. Like, we believe that there's going to be a Bitcoin economy.
Right.
And I don't know if it's going to be the biggest economy in the world or the 5th biggest, but I think it's going to be big. And a defining feature of every economy of significant size in the world is it has certain financial institutions. Because those financial institutions they obviously do a lot of bad things in the world, but they also exist because they do these core fundamental things. Back to what happens to you your family if you die before you're supposed to. What happens to your family if you live longer than you're supposed to? So we set out, like actually how we started the company is we sat down and we said there's going to be a Bitcoin economy. We're really good at regulatory bullshit. We're just comfortable handling that.
Yeah.
That's like our backgrounds, like is tech, fintech, regulatory stuff. So we made a list of like, what are all the financial institutions that need to exist in that Bitcoin economy? Now, in a funny story, actually, we didn't think of a life insurance company. And then I woke up in the middle of the night, like at 2 a.m, a month later, being like, there should be a Bitcoin life insurance company. And then I went to my office and I like wrote the whole memo that became the memo we raised our seed funding on. But fundamentally, that's the point is like we believe in this economy, and this we believe is going to be, will be like a defining service, a defining company of that economy.
Yeah, there has to be, for Bitcoin to emerge, there has to be this interpenetration of legacy finance and Bitcoin economy, right? They have to be woven together to some extent. You see this a lot of business models in Bitcoin, right? The NYDIGs and the other Bitcoin banks and the custody services, et cetera. Obviously, insurance is another one of those verticals that has to be integrated with Bitcoin in some way. So, makes sense. Sounds like you've got your hands full, though. That's a big mission you're on. Where can people go and learn more about this? Obviously, this is can be a complicated area, so I'm assuming there's plenty of rabbit holes to go down for people that might be interested. Where would you send them?
So we live on the internet at meanwhile.bm, which is Bermuda. Meanwhile.com resolves there too. And as I said, what people sign up and then we reach out or try to talk to every user. And I just want to add that, the long-term vision for the company is not merely to do tax planning for rich crypto whales. I mean, that can be satisfying. It's important. But, there were 57 countries in the world that had inflation rates last year over 10%.
Wow.
And that doesn't include like the UK and the US, both over 5%, right? So if you live in Argentina or Turkey or Nigeria, you don't own life insurance for all the benefits we spent the early half of this chat talking about. You just don't have insurance because you are going to live longer than the Argentinian peso.
Chris.
Right? Like that should be your expectation if you were our age and you lived in Argentina.
Yeah.
Like given the past 40 years.
It's already died like 4 or 5 times in the past few decades, right?
Yeah. So you don't have insurance. So that's the big dream, is that the Bitcoin economy is not just, people who bought Bitcoin in 2013 and have like proven to be geniuses. Those people are important. They're my customers. Love you guys. But also that this idea of a global decentralized store of value outside the control of any government in any state is world changing, and it can be truly transformational for people who live in countries who have just had completely mismanaged and unstable monetary systems. So what I really want to get into, and like we're working towards and building towards, is that you're in Argentina and you could buy I can't do the math, like a 10,000 Satoshi policy for whatever an appropriate payout is on that, 150,000 Satoshi payout. And that would be meaningful intergenerational wealth creation for many, many people. And more importantly, maybe that they would have the genuine protection and service that life insurers were invented for, but in a store of value that will persist no matter what their governments do.
Well said, and I wish you well on that mission because I think we need it. So, Zac, Thank you so much for doing this.
Happy to be here. Thanks, Robert.
Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money, and be sure to subscribe to this channel to stay connected.